Hello and welcome to Forex Academy, your number one website for Forex and crypto education and analysis. In today's edition, we're going to be discussing the Black Swan event update. If you missed our earlier edition, a financial Black Swan event is usually a catastrophic event such as the Japanese earthquake and tsunami of March 2011, or virus breakouts events such as the SARS epidemic in 2002 to 2003. Avian flu or the Ebola breakout would also constitute as a Black Swan event. These events cannot be predicted and have a risk of severe consequences for the global economy. Black Swan events are thankfully rare and have a severe market impact. They are also almost impossible to predict. The latest COVID-19 breakout in China could turn out to be a major Black Swan event with severe implications to the global economy. While previous Black Swan events such as the 2003-2004 SARS epidemic wiped out 14% of the S&P 500 in as little as 2 months, it subsequently went on to recover its losses and gain more from then. The avian flu crisis in 2006, the Ebola crisis in March 2014 both had similar effects, with the S&P slumped at the time only to recover and thrive after the events. It would therefore seem to be that stocks indices, especially in the USA, such as the S&P 500 and the Dow 30, have taken that on board and, as of yet, have suffered no real sustaining selling pressure. And although both have recently hit record-breaking all-time highs, we might expect normal ebbing and flowing based on US fundamentals until the real global impact of the COVID-19 can be seen in terms of hard data. This won't be available for several weeks. History tells us that the markets are prone to short jolts during such events, but they go on to recover and in many cases make further gains than were lost. Another fairly typical scenario would be for investors and traders to bail out of riskier assets, such as equities, but that isn't happening in the USA at the moment, and where safe haven assets such as the yen or Swiss franc currencies are getting bought. However, when the diamond health expert who visited the Diamond Princess at the port Yokohama said the situation on board was completely chaotic, it left the market wondering if there could be an outbreak of the disease in mainland Japan, who earlier in the week said the virus could impact their GDP by 0.2%. This, coupled with weak data and the possibility of a spread of the infection in Japan, saw the USD JPY pair punch through the psychological level of 110.00 barrier this week. Should there be a breakout, it would prove catastrophic for the Japanese economy, and where we might see the pair accelerate to the 115.00 and beyond. With the yen failing to act as a safe haven, we might see a continuation higher in the USD Swiss franc, where the Swiss National Bank have made it clear they are not happy with the strong franc, and they will defend this stance by intervention, in which case we might see a return to the 0.1000 level. The pound and the euro have their own problems, with uncertainty regarding if the UK can reach a trade deal by the deadline of December 2020, and where the economic data coming from the euro area looks bleak, and Germany is struggling to achieve growth. The COVID-19 virus will not help this. The Australian dollar is also on the back foot due to its dependence on trade with China, as with New Zealand, and we may see the AUD USD hit a 0.63 and NZD USD test the 0.60 in the short term if there is no immediate resolution in China, which looks highly unlikely. Oil prices are at risk, and we could expect gold and precious metals to remain bid. The Chinese government has committed to honouring the trade pact with the rest of the partners across the globe, but the longer this goes on, the more likely the markets will doubt if this is possible. And so, while the US economy remains strong, and while economically and geographically it remains on the peripheries of the virus event, and with its highest interest rates and the other safe haven currencies, we should now see a further surge in the USD DXY, which is approaching the psychological level of 100.00. This is now being seen by the markets as a safe haven currency and preferred investment choice. Therefore, all scenarios and strict data dependent are likely to be fluid and volatile as things unfold. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.